Hello dear students, welcome back to Jayanti's Academy of Commerce and Management. In today's video, let's learn bank reconciliation statement. Usually students feel it as a tough topic, but I'll make easier for you. So please don't skip the video and watch till the end. In financial accounting, one of the most important topic is bank reconciliation statement, and our learning objectives in this video are: we'll learn meaning of BRS, concept of BRS, causes or reasons of disagreement between cash book and passbook, part 1. Without any delay, let's get started. Okay? Now, let's understand the meaning of BRS. It refers to a statement. Okay, BRS refers to a statement in which it is prepared in order to reconcile the differences between the balance as per bank column of cash book and passbook at any given date. I'll make easier for you. So, generally, you have your cash book and you'll also have a passbook. Passbook is provided by the banker, cash book is prepared by you. So to know the differences, you need to do BRS statement. For example, in your cash book you have 10,000 as your balance, but in your passbook it is showing 12,000 as the balance. So what is the difference between 10,000, 12,000, 2,000? So where you are making wrong? Either in cash book or either in passbook. So to know the differences, why there is a difference in the balance in your cash book as well as passbook, you need to verify it. You need to reconcile it. So you are going to check your cash book along with your passbook. Okay, compare both, identify the errors or identify the omitted transactions, know the value and understand the final figure is called as bank reconciliation statement. I hope you all understood it. Therefore, BRS is prepared by a trader, a businessman, mostly at the end of every month or quarterly or half-yearly basis. Okay. So why it is important? Let's see. This will help the trader to find out the mistakes and errors which take place in cash book and passbook during a period. So before doing BRS problem, we will understand what is cash book. Okay, cash is related to real account in golden rules of accounting. I hope you all know the golden rules of accounting. If you haven't know or if you haven't seen the video, golden rules of accounting video is already prepared and is provided in the iCard. Please do check it. Therefore, cash is an asset and asset deals with real account. Real account rules is debit what comes in and credit what goes out. Therefore, whatever is coming inside the cash book, whatever is coming into the business, we will record on the debit side, and whatever is going in the form of cash, we are going to write on the credit side. So, debit what comes in, credit what goes out. Debit side we write all receipts, credit side we write all payments. Therefore, cash book is a special journal which is used for recording all cash receipts and cash equivalents. Now the most important thing you need to remember is, as we discussed in the previous clip, debit what comes in. So debit all receipts. So whenever cash book increases, then you need to add. Whenever cash book decreases, you need to subtract. Okay, so cash book debit balance high. What is debit balance? Receipts. So when receipts are more and payments are less, then you'll get favorable balance. Okay. And in another situation, when cash book credit side balance is high, that means payment side is high and debit income side is low, then you'll get unfavorable balance. In simple language, it can be explained as income should be high, expenses or payments should be low, then you will have surplus balance, which is also called as favorable, or else it is negative balance, unfavorable balance. Always remember that cash book debit balance high, favorable. Cash book credit balance is high, unfavorable. Please do remember it. And always remember while doing BRS, when cash book is increasing, please do add, and when cash book is decreasing, please do minus. I hope you understood what is cash book. Now let's understand what is passbook. Bank passbook or a statement of account is usually issued by the banker to its customers. It is basically a copy of the customer's account in the bank records. Same repeats here. When passbook is increasing, you need to add, and when passbook is decreasing, you need to subtract. Okay, and remember, in passbook you have debit as well as credit. So credit balance means deposits. So always remember, passbook credit balance, banker record all deposits. So whenever passbook credit balance is high, okay, it is considered as favorable balance. Okay, when passbook debit balance, that is withdrawals, are high, then it means it is unfavorable balance. We'll do a quick revision of cash book and passbook. Is that clear? So cash book debit balance are favorable balance, whereas in passbook debit balance are unfavorable balance, opposite. Okay, cash book credit balance, that is payment balance, are high, it is unfavorable. Here in passbook credit balance, that are deposits, when deposits are high, it is favorable. It is vice versa. Please do write in your notes, don't forget, and don't skip it. It is very important topic. Please do write notes or take a screenshot. I hope everybody understood the introduction part of bank reconciliation statement. Now let's move forward and learn what are the causes or reasons of disagreement between cash book and passbook. Okay, so we have 8 reasons. Okay, 8 reasons of disagreement between cash book and passbook. So first, in rough, we are going to know about what are those 8 reasons, and slowly let's learn each and every reason individually with clear information and data. First reason, check issued but not presented for payment. Okay, you're issuing check to somebody, but that check was not presented for payment in the bank. That was the one reason. Next, interest or dividend directly collected or credited by the bank. So whatever interest or whatever dividend you are getting, that is directly credited in your bank. That information you don't know, that's why you didn't write in your cash book. That is one of the reason. Third, checks deposited into the bank but not collected. Okay, so you deposited checks into the bank, okay, but bank did not collect it. Fourth, payment made by the bank. Now bank is doing payment behalf of you, okay, like bank charges, insurance premium, commission, interest on overdraft, etc. Okay, this is one type. Fifth reason, dishonor of check. Sixth reason, checks entered in the cash book. Okay, checks entered into the cash book but omitted to deposited in bank. You are entering check into the cash book, but you are forgetting to go to bank and deposit that check. So that is one of the reason for not matching of your cash balance and bank balance. Clear? Next, seventh reason, wrong entries in cash book, wrong entries in passbook. Eighth reason, check issued but not recorded in cash book. These are the 8 reasons for disagreement of cash book and passbook. Now, let's understand every reason individually with a clear data, how to write and how to understand and how to record in BRS statement. Chalo, let's get started. So, let us do these causes in practical. Number 1, first reason, please open your notes and write these points very carefully and make notes of it for your future references. Point number 1, check issued but not presented for payment. I gave an example amount of 1000. Okay, you issued check, okay, to somebody. That means you are doing some payment, but that payment didn't go, that check didn't go to bank for collecting the payment. That is a reason. Please understand basic English of the sentence and try to interpret. Check issued, you gave check, That's why you're writing in cash book. See here, I gave you two pro formas of cash book as well as passbook. On the cash book debit side we have receipts, and cash book credit side we have payments, as well as on the passbook on the debit we have withdrawals, and on the credit we have deposits. Entries will be in opposite area, please do remember it. So when you are giving check, when you are issuing check to somebody, you will write in your cash book saying that payment has been done 1000 rupees here on the credit side of cash book. But what is happening? But whatever check you gave, okay, that didn't go to bank for payment. Therefore, in your passbook, withdrawal column is empty. Okay, you are thinking that you have done payment in the cash book. That's why you wrote on the payment side. But actually, payment didn't happen through your bank. That's why your withdrawn column in the passbook is empty. So what is happening to cash book? It is decreasing. Payment means amount will decrease, no? That's why I have given here decreasing symbol, down arrow. But what is happening to the passbook? It is increasing. So whenever your payment column is getting decreased, then the opposite party will increase. Please remember, opposite poles attract. Clear? Here in the cash book we are 1000, it is getting decreased, so that passbook withdrawal amount is getting increased. Okay, understand till here how to do practical problem, we'll see in the next video. Now let's go to second reason. Interest or dividend directly collected or credited by the bank, or interest dividend credited in only in passbook. This is a reason. Now understand its meaning. Interest or dividend, okay, it is directly credited in your bank account without your notice. So whenever company pays you interest or dividend, what they do, they directly transfer to your bank account. Okay, but you don't know that your amount has been received, bolke. So what you will do? Nothing. But here in your passbook deposit side, 1000 amount is increased, directly received from the company to your bank, but you didn't know that payment has been made. That's why you're writing nothing in the cash book receipt side. So that is the reason for your disagreement in your cash book and passbook. So on the deposit side of passbook, when amount is getting increased, deposit means you will add, withdrawal means you will minus. Remember that. So when you're writing this 1000 in the deposit column, then what is happening to your receipt column? It is decreasing. Deposits increasing, receipts decreasing. Okay, understand the meaning and follow the statement. I hope you understood it. Now let's understand third reason. Checks deposited in the bank but not collected or credited by the bank. Not collected or not credited by the bank. Now let's understand the meaning of it. You are depositing check into the bank. You went to a bank, you took a check, you went to a bank, you deposited in the bank, but banker takes some time to settle your cash, your check, right? He will not do immediately. You will drop your check in the check box. He will take some time. But actually what happened? That bank cashier didn't do your process, didn't deposit your check. He forgot. Therefore, your deposit sides are empty. But what you will assume in your brain and in your cash book, you think that okay, I received check, I went to bank, banker will settle the check and I will receive money. This thing you will think. Okay, so what you will do, you will go to passbook and you will write on the debit side, receipt side, that 1000 rupees has been received in the form of check. Okay, you will think, you will assume like that and you will write here. But actually, that check is not yet deposited. So your cash book is increasing and your passbook is decreasing. Now let's see fourth reason. Payments made by the bank. What is the meaning of it? Banker is doing payment behalf of you only. What are those payments? Such as bank charges, insurance premium, commission, etc. Okay, so without did ever banker call you asking that, madam or sir, can I withdraw money from your account in the form of bank charges and premium? Never he makes a such type of phone calls, right? So before giving you any notice, he will deduct the amount. Therefore, what is happening? Your passbook withdrawal balance, I mean debit balance, is coming down. It is debited. Okay, 1000 rupees has been, payment has been made by the banker itself. Do you know that? No, you don't know that payment has been made. So that's why you're not writing anything on the cash book payment side. Okay, so what is happening here? On the passbook withdrawal, debit balance is decreasing. And here on the cash book, payment side is increasing. Okay, remember that. You know that payment has been made, you will write. But here you don't know. It is directly made by bank. How will you know? Without seeing or without referring your passbook. So this type of mistake caused a disagreement between cash book and passbook. Let's see the fifth reason, dishonor of check. What is the meaning of dishonor? Dishonor means cancelled. Okay, you went to bank, deposited your check, but what happened? Check get dishonored. I mean cancelled. So what you will assume in your brain? That you went to bank and you'll have some hope in your heart thinking that you will receive your money. Okay, that's why you're writing on the cash book debit side that 1000 rupees will come to your account. But actually what happened in the bank, the check got dishonored. So here depositing is not occurred. So when there is no deposit here in the cash book, as you written in the cash book, that amount will be credited. I'm credited. Here you will increasing. Cash book is increasing, but actually what is happening to passbook? Deposits are not there, therefore it is decreasing. Okay, please take a screenshot and make a note of it. Now let's understand sixth reason, checks entered in the cash book but omitted to be deposited in bank. Here the joke is, you entered that check has been received. Okay, now you received the check, you have written in your cash book also ki you have received check of rupees 1000. Okay, but you forgot to go to bank only. You forgot and you omitted to deposit that check into the bank. What will happen? Do you think automatically money will be credited in your bank without providing check into the bank? No, right? So what is happening here? As you returned in your cash book that 1000 rupees check is received, but actually you didn't give that check to the bank, therefore there is no deposit. Here cash book is increasing and passbook is decreasing. Let's see seventh reason, wrong entries in cash book or passbook. We have two cases. Let's see the first case. If someone by mistake deposited cash in our bank account. This is very rare case. If someone is depositing cash by mistake, okay, into our bank account, do we expect that? No, but amount has been deposited in the bank account. That's why there is an amount here in the deposit column of passbook. It is increasing. Now deposits are increasing, but we generally don't expect certain cases, situations. So we are writing nothing on the debit side of cash book, that is on the receipt side. So therefore there is a differences between cash book and passbook. Now passbook is increasing and cash book is decreasing. Let's understand case 2. If a banker have debited the amount from our account by mistake. Okay, here what is happening? Now banker is doing some mistake and accidentally he have debited our amount from our bank account. Therefore our amount is getting debited in the form of withdrawal in the passbook, but we generally don't expect this in reality, right? So we are writing nothing in the cash book, that is on the payment side. Therefore withdrawals are decreasing and payments are increasing. Passbook is decreasing, cash book is increasing. You need to understand like this. Let's move on to last reason, that is check issued but not recorded in cash book. Okay, now you gave check to somebody to for your payment. You made a payment to somebody. You gave a check. Okay. And that person went to bank and he withdrawn amount also. Therefore, in your passbook, your amount is getting withdrawn. But you forgot to write that matter. Okay, that check has been issued. You forgot to write that in your cash book. That is on the payment side. Okay, I hope you understood. Check issued but not recorded in cash book. You issued check. That person went to bank. He have withdrawn also from your bank account. Money has been debited also. But actually thing is you forgot that situation to write in your cash book. Therefore, passbook is decreasing and cash book is increasing. So these are the 8 reasons for disagreement between cash book and passbook. I hope everybody understood it. If you didn't understand, again go back, see the video from the beginning, go two times, 3 times, and more number of times, okay, to understand better. Write well, practice well. Don't feel it as a tough topic. It is very simple topic if you keep on learning, practicing and listening to the lecture. Therefore, BRS problem with solution will be posted in the upcoming video. Please do watch it. Okay, keep watching. The more you reflect, the more you learn. So keep practicing. And if you are liking our content for more knowledgeable lectures, please do like, share and subscribe to our channel Jayanti's Academy of Commerce and Management, and please do follow us on Instagram page Jayanti Commerce. Thank you. I'll see you in the